Hello, everybody, and welcome to Schwab Live Daily. Our next topic today, Ichimoku Cloud. My name is Lee Bohl, and I'm a trading services manager with Charles Schwab out here in California. Before we begin, just a few logistical items. You can send in questions in the Q&A functionality underneath the presentation window. Your questions are private and will only be seen by me. I'll keep my eye on them. If it comes in about what we're talking about at the time, I'll answer it then. If not, I'll answer it at the end of the webcast. We also have written disclosures we need to share. Everything we're talking about should be considered as educational, informational only. Nothing's a recommendation. We mentioned short selling. That is an advanced trading strategy. Must be done in a margin account. Also, any symbols you see me utilize or illustrate concepts and functionality and are not recommendations. We're talking about a technical analysis indicator, but Schwab survey does not recommend the use of technical analysis by any means as your sole method of investment research. Okay, so first let's talk about these indicator labs in general. We are not pushing one indicator versus another. We simply do these because they're available and people have asked over the years, oh, what's this about? How do people use it? So simply that is why we do these, just to give you a feel. You know, maybe one will resonate with you and you'll start using it, or maybe you watch it and you say, no, that one's not for me, which is also just fine. All right, so our agenda for today is to do a little bit of background on this kind of interesting looking indicator called the Ichimoku Cloud. We'll go over how it's constructed, the different components, and then we will go over the different trading signals that have been developed over the years if you want to use this indicator. Okay, so it looks very complicated on the chart, but it was not designed by a rocket scientist. It was actually designed by a journalist. The official name of the indicator, Ichimoku Kinko Hyu. Loosely translated, I do not know Japanese, but they tell me Ichimoku means one glance equilibrium chart. The system was created by, as I said, a journalist. His name was Goichi Hosada, and he was a Japanese reporter who liked the markets. And what he was looking for is an indicator that we kind of be all or one, all or, just one indicator on the charts. I will certainly say that people that do use this do not put anything else on the charts. Typically, Ichimoku practitioners simply use this indicator and nothing else. Okay. So he fine-tuned the system over many, many years, and he published his findings finally in the late 1960s, and it was rapidly adopted by traders in Asia. It became popular in the US in the 1990s. I would say that, from what I understand, many Asian currency trading desks use Ichimoku, for what it's worth. So it's based on, we have the 10-day moving average, the 20, the 50. Well, here, Ichimoku is based on the numbers 9, 26, and 52. Why is that? At the time that Goichi came up with this, there were actually 26 trading days in the month because they traded on the weekends. So 26 trading days in is a month, so 52 is 2 months, and 9 is about a week and a half. You can customize those numbers, but many experienced Ichimoku practitioners tend to say you might want to stick with the defaults as they have stood the test of time. Also, to the extent that any indicator is self-fulfilling, maybe you want to see what everybody else is looking at. Now, the indicator is designed to give you a basic feel in one quick glance of the trend or lack of a trend. As I said again, most Ichimoku practitioners only use this indicator on the charts. They do not add anything else. Okay, so it's important to know that, for instance, in the West, we tend to like to use closing prices to do analysis. Typically, moving averages, for instance, are based on closing prices. Well, in the Japanese world, they consider highs and lows more important than the close because here is what they feel that the low is where buyers came in and kept it from going lower, and the high is where sellers came in to keep it from going higher. So the low is where the supply overwhelmed demand, and the high is where demand overwhelmed supply. Now, ichimoku is generally considered to be a trend following system, but we'll also see that you can use it to look for support and resistance as well. Now, one of the unique features of this indicator is it projects future price action. Goichi believed that current price action has some repercussions in the future, and so it projects dynamic support and resistance areas into the future. So it's one of the few indicators that tries to give you a heads up uh, of what's coming. You know, kind of like pivot points that well. Pivot points also try to give you a heads up of at least intraday support and resistance. So this is a indicator that does have some forward-looking components to it. All right, now to understand the indicator, it's very important to know how it is constructed so you see what the reasoning is. So we have 5 components to the indicator, okay? I have both the Japanese terminology and I also have the English terminology that's generally used. And as we'll see, the most visually striking part of this indicator is called the Kumo cloud. Now, for those of you who do speak Japanese, I am aware that Kumo in Japanese does mean cloud. So it's really saying cloud, cloud, but hey, that's just the way people refer to it, okay? So the 5 components are Tenkan-sen, which is translated to the conversion line. Then we have Kijun-sen, translates to baseline. Senko span A translates to leading span A. Senko span B translate to leading span B. And Chikou is a lagging span. All right, so let us start with the first one, Tenkan-sen, or the conversion line. So here's how it's calculated. You average over the previous 9 periods, the highest high and the lowest low, and that gives you the number. So here it is. So it is the highest high of the last 9 periods plus the lowest low of the last 9 periods divided by 2. In the theory, it is supposed to be the equilibrium price for whatever you're charting for the last 9 periods. It is important to note that while it looks like a moving average on a chart, it is not a moving average, okay? It's totally different. So this is different than a 9-period exponential moving average or simple moving average. Now, what I did when I first tried to learn this indicator years ago was just go to the chart and put on each component separately so you can see what's happening. All right, so let's go do that. All right, so here is the S&P 500, for example. The way you get to the indicator panel itself is you just open up this little drawer, you go on View All Studies, and then it is under Trend. So you have the Ichimoku cloud right there. So I have changed the colors just a little bit from the default because there's an awful lot of red and greens on the line, and sometimes you get confused. So I changed the fastest line, which is Tenkan-sen, to yellow. Okay, Chikan span is also typically green, but I make it a different color, so it's just easier to see. So again, what I like to do is put them on one at a time so I understand what's going on. So the first thing we'll put on is Tenkan-sen. So you can see it is a 9 period average of the highest high and the lowest low. So we're going to put that on the chart, right? As I said, it can act as support or resistance, even though it's not a moving average. Look at how all the rallies in the big downtrend went right to the conversion line, right? And then when we popped through it and pulled back, notice how it acted as support. All right, so it both gives you the short-term trend, which is the slope of that line, and it also gives you minor support or resistance. All right, the next one is Kijun-sen, which is called the baseline in English. It is the same calculation, except you use 26 periods. So it's the highest high of the last 26 periods plus the lowest low of the last 26 periods divided by 2. It is considered to be the equilibrium price for the last 26 periods. Remember, that's about a month when they were trading on the weekends in Japan. Once again, please keep in mind, it is different than a moving average. It is not equivalent to either a 26 period exponential moving average or a 26 period simple moving average. Okay. Now, it is a little bit longer, so it can act as longer term support or resistance as well. So now let's go add that to our chart. All right, so we're going to open this up again. And now I'm going to add in Kijun. Here is, again, the default, the 26 period average of highs and lows. Okay, we'll add that. And there is Kijun. Okay, next we have Senko A, or leading span A. What it is average of Tenkan Sen and Kijun Sen projected into the future. So here is Tenkan, here is Kijun. The average is be right there. You push that out 26 days into the future. Okay, and that gives you the Senko line. If Senko is rising, it's considered to be in a bullish trend. If Senko is falling, the trend is considered to be bearish, right? So let us go. We'll put on Senko A because you got to put on Senko A and Senko B at the same time. So let us go talk about Senko B. So it is the average of the highest high and lowest low of the last 52 periods, again, projected 26 days into the future. Once again, for a longer term trend, if Senko B is rising, the stock is considered to be bullish. If Senko B is falling, the stock is considered to be bearish. So let's just talk about these. So if Senko A is above Senko B, the chart is considered to be bullish. If Senko A is below Senko B, the chart is considered to be bearish. Okay? So in here, we had a bearish aspect, right? The bear started here when Senko A dropped below Senko B. This is how you get the cloud. The cloud is the area between Senko A and Senko B. If Senko A is above Senko B, the cloud is generally, you can do whatever color you want, but generally it is green. If Senko A is below Senko B, it is red. Okay. All right. So now let's put these on and take a look. Now, do we understand all that? All right. So Senko A and Senko B are now on there. We could take off these if we wanted and just look at those. And there they are. Okay. So the difference between them will be the cloud. So if we go back here and we say we want to see the cloud, which will be the difference, between those lines, there's the cloud. Okay. So right now the cloud is green. That's bullish. Okay. Now, another way that people use this is if the current price is above the cloud, the chart is considered bullish. If the current price is below the cloud, the trend is considered bearish. If you are within the cloud, then it's telling you that the market or the stock is in sideways choppy consolidation mode. Also notice that the cloud itself, the boundaries of the cloud, can give you support or resistance as well. Okay. To prove that, look at this pullback, these two pullbacks right in here in the beginning of May, how the cloud acted, the upper border of the cloud acted as support. Right now, price is above the green cloud, saying this is a bullish chart. Okay, when the Senko lines cross, that means that cloud will change color, right? Sometimes people use that as a trend reversal signal, but it comes, I would say, sometimes a little bit too late, but that's how people use it. Okay, so basically, the cloud turned bearish, right in here. So again, it came way too late. So typically don't use that myself. Okay, this is kind of interesting. A lot of people don't even use this, but this is called Chikou. And I think it's probably the most misunderstood of the Ichimoku components. Many traders don't even put on their charts, either because they don't understand it or because they think it is just too simple to be useful. But experienced practitioners use it all the time. So what is it? It is the current price pushed back 26 days. Okay. That's why it's called the lagging line, because you push it back. So what it means is if Chico is above the current price, that just means that we're in an uptrend, right? Because the current price is higher than we were 26 days ago. It's an uptrend. Similarly, if it is below price, well, that just means that price now is below where it was 26 days ago. It's a downtrend. Some people actually use something as simple as the cross of Chico over price as a signal. This would be a buy in here, right? This would be a sell pretty clearly, in here somewhere. So not a bad indicator for that. A lot of people use it just to confirm other trading signals. And we're going to go over what those trading signals are in a moment. All right, so what trading signals generally are generated by this indicator? All right, so here are the main signals. Bullish and of course bearish is just the opposite. So price moves above the cloud. That's a bullish signal. Okay. Cloud turns from red to green. The Kumo twist. That is a bullish signal. Price moves above Kijun, the baseline. That is a bullish signal. Tenkan Sen conversion line. This is like a moving average cross, but keep in mind they're not moving averages, but this is where the conversion line crosses above baseline. Okay, we're going to take a look at chart examples of each of these signals so you can see them. The bearish signals are same things in reverse, right? Price drops below the cloud, bearish. Cloud turns from green to red, bearish. Price drops below Kijun, bearish. Conversion line or Tenkan-sen moves below Kijun, the baseline, bearish. So let's just take a look at some of the signals. Okay, so right here, price drops below the cloud, bearish. Also notice how the cloud itself acted as resistance when you threw back, right? So remember, cloud borders can act as support or resistance too, okay? All right, did we get any other signals? Well, the next signal was way over here where price went above the cloud. That was a buy signal. Again, comes kind of late, but it is confirming, okay? The twist. This was a sell signal. Again, I think these are a little too late, but there you go. So you did get some of that. Here was the buy as we twisted back from red to green. All right, let us talk about now the baseline signal, okay? When price drops below the baseline, which on this chart is red, that would be a sell signal. When price crosses back above the baseline, that's a buy signal. This comes much earlier than the twist, you know? So there you go. This is like a moving average cross, okay? This is where your short line, the Tenkan, when Tenkan crosses below Kijun, that's a sell. When Tenkan crosses above Kijun, that is a buy. In what time frame does this system work best? Yes, I would say most people use it on daily charts, although from what I'm told, currency traders use it on intraday charts. All right, so now let's talk about Chico. All right. Again, some people don't even put it on their charts, which I think is a mistake. Okay, so usually people use it to confirm other signals, but as I showed you before, a pretty easy system is just when Chico crosses price, if you want to look at the other way, price crosses Chico, it's a signal of trend reversal. Now, ideally, if you're using it that way, you don't want just the little cross of price, okay? You want a little bit of daylight between them, all right? So if you're using it by itself, it's bullish when Chico crosses above price. It's bearish when Chico crosses below price for reasons we already talked about. It's common sense. When Chico crosses above price, it means that today's price is higher than it was 26 days ago. You're in an uptrend. Okay, so let's take a look at some signals just using Chico. All right? So here, Chico crossed above price, right in here. So you could use that as a signal, or if you were using the slower signal of Tenkan crossing Kijun, you would feel better about it because Chico was above price, giving you the confirmatory signal. Okay. All right, so that's it. Let me get some questions. All right, yes, you can get the slides. If you go up to the top of your screen, there'll be a resources link, and then it'll open up, and then there's technical analysis, and then the slides will be in there. Okay. All right. So we have a question. Did it project the drop this year on the QQQ and all that? It is lagging. That's why I don't really use the twist, but the conversion line baseline cross. Let's take a look at a chart to answer your question there, Ray. All right, so let's put up the QQQs. Let me put up all the indicators now. So we're going to go here. I'm going to turn them all on. All right, so there they all are. Okay, so let's put up, yes, let's do the QQQ. One other thing I would mention is notice how I have my chart have 26 periods in the future. You should do that. So really what this is saying is, because we have a question on this too, how about the future projections? Really the way I would use this is if we had a pullback, that could be a place where any pullback might stop. Also, right now in the future, you have a green cloud, so that is bullish. Now let's take a look at the lag, okay? So where, as I said, this is where you got the twist, right? Right in here, way too late if you ask me, okay? But let us see if the other signals help at all. So I'm gonna take off Chico just for a second. So let us just take a look at, this gave you a pretty good heads up, right? When the conversion line crossed, that was a pretty good signal. So if you want an earlier signal to follow, I would use that. It gave you a buy in here, and we're still in a buy, right? It gave you a pretty good sell in here. I think that is more useful than the cloud itself. I use the cloud to the extent I use it for support or resistance. We have a question, does the thickness of the cloud mean anything? It is the thicker the cloud, the more momentum you have in whatever direction it is. Okay. Now let's take off everything and just say Chico. I mean, I'm a proponent of Chico, although people don't use it that much. So what we're going to do is go back in here. I want to take off everything, and we're just going to put Chico on there as an indicator. Right. Notice how this actually is early. Okay. Notice how Chico dropped below price. That was a warning sign. It didn't get confirmed for a while. Okay. Where did it give the buy signal? It gave the buy signal right in here. Okay. Which is down in here, right? So it's simple, but it seems to work. I mean, so again, I don't use the cloud color so much other than for support or resistance. I think some of the other components are more interesting. Should durations be adjusted when in volatile markets or individual stock? That's from William in California. Again, as I said, if you talk to people that are really practitioner of this, I'm not, but they suggest really not changing the default. So, all right, that's it. Again, you can get the slides the way I told you. Thanks for your questions. And coming up next, closing remarks with my buddy Nina Milovat. She'll be back, and with derivatives trading manager Kevin Green. So take care now. Bye-bye.